Hi guys, welcome to the Tom O'Brien Show. I'm John Logan, filling in for Tom today. I used to do a morning show. We might get back into that someday, but while Tom's away, I thought I'd sneak back in, get an hour in. Good to be here again. It's always good to watch the Tom O'Brien Show and talk to everybody in the den. It's been a while, and it's good to be back. So let's get right into something here. I want to show a chart on the S&Ps, and then I want to move into the Treasuries. Because, you know, those things kind of were in a tug of war for a little while there, and it looks like the good old S&Ps are going to win. I'm glad for most of the investors out there that the market's still holding up, but it's, you know, it's kind of hard to go long and hard to go short up here for me. But I want to talk about a couple of things technically that may be of interest, just so you can get a kind of a bird's eye view and make some decisions for yourself. And by the way, I think Tom has got something on the homepage of the TFN. I've obviously been working on a scanner for a long time, and I've got a really, I think, kind of insightful video. It's about 8 or 9 minutes, and I think you can access it off the homepage, and you can take a look at what that whole thing is about, and feel free to take a look at it. But what that scanner relies on, really, for the most part, are looking at profiles, and we're going to talk about profiles as we look at these S&Ps and look at the Treasuries in just a second here. But you know, scanner kind of cuts quickly to the meat of the equation when it comes to looking at the individual instruments or the broad indices, futures, currencies are in there, and this is the way that I base trade. This is what I base trades around. Is what we're getting ready to talk about. So, you know, had some cracks in the armor obviously yesterday, and what I want to point out here is, you know, these inflection points on our long-term weeklies and these profiles, this, you know, volume relative to price that we're going to talk about. You know, the longer-term time frames, as you drill down to the right into shorter-term time frames, those longer-term time frames always take precedence when it comes to, you know, the inflection points that are really the powerful pieces in my mind of these profiles. So what does that mean? 2404.50 down in or up into 24, I believe it was 06, which is another inflection point we're going to look at in a second. That was kind of a DMZ kind of dig-in point yesterday if you were going to think about nibbling on the long side. And again, for guys out there who are just going on long Cisco and hanging on for months, this might not be super interesting to talk about day-to-day fluctuations in the S&Ps, but you can look at this information and get some long-term views. And, you know, the bottom line for me is, when is it okay to be long, not okay to be short, or okay to be short, not okay to be long, and just looking at it really black and white simply. So we've defended the top of our profile, all things considered, of what I was saying before, at that DMZ or at that neighborhood around 2404.50. And I think yesterday we reached a low of what, 2402, 25. So in volatile times, especially like yesterday, and you just kind of had kind of a throw up situation at the bottom, and then a pretty quick reversal. You want to see instruments really defend these long-term inflection points like they did yesterday. And we've been kind of staying above profiles here for a while, 2404.50 on the S&Ps. This is the futures, mind you. But as we closed above there, month and a half ago, we went back and retested. We've kind of been strong, and yesterday was a really, really good litmus test that, you know, we ain't really changing tone yet. So it kind of raced away from those inflection points that I just spoke of pretty seriously. We've got a good bounce off of there. So, you know, weekly close back in below those numbers for long-term guys out there would really kind of predicate possibly an exploration of an entire fair auction. In this case, believe it or not, the next lower number on a long-term time frame is around 23.26. So, you know, that's a 75 point, 80 point move down, but we didn't get that confirmation of closing back in the box, so to speak, to really even start getting excited about anything was coming apart at the seams on a long-term situation. So now that I've said too much, I want to pull up our daily and let you understand that 2406, that 2404 was defended very, very well. And we've kind of started creeping, if I can use that term, a little bit higher above the daily profile, and that means we've kind of cleared all congestion. I want to show you something in the scanner. I've got some stocks up on the screen right now that we're just breaking down on today and this week, actually, which I want to talk about those in a little bit. But as I go into the dashboard, excuse me, and I look at our S&P kind of sell structure, we're green again for the most part, especially on the long terms. Our weekly breadth hasn't wavered that much, and breadth being kind of an aggregate look at profiles within the index of all the internals. And, closing a week relatively positive like this is not, you don't want to go home this weekend, I don't think, short. So you got about 50 minutes left to not be short. So that's one of the things I wanted to talk about initially. So if that's the case, as a trader, and again, you long-term guys are just happy to see this defense mode that it's been in. But as a trader, you might be able to pick up some things that are not exactly going with the market, try to find some anomalies, try to take advantage of those anomalies from a trading standpoint. And, a lot of times when the market's making moves like this or it gets volatile, it'll kind of have stocks show their hand, whether they want to go along with the volatility, whether they want to go down with the market, and more importantly, at this state from yesterday's afternoon to right now, want to go up with the market. So that being said, in a little bit, we're going to take a look at some stocks after we look at the treasuries that I think are relatively ripe opportunities that may be given out of gas in general.